because I'm calling from the mobile. Is it clear?
Yes, it's clear.
Okay, excellent. So, a very good evening, friends. I welcome you all to this conference call on Emami's result for the fourth quarter and year ended 31st March 2020. I hope all of you and your loved ones are safe and healthy. The current financial year has started during an unprecedented time when millions across the globe have been affected by this COVID-19 pandemic and deeply impacting the lives and livelihood of people. The pandemic warranted agility and adaptability to combat the situation while standing in solidarity with our employees, business partners, and other stakeholders to ensure safety and precautionary measures for all. The dynamic scenario presented daily challenges, which was met head-on by our team to bring about learning to face the new normal confidently. We are happy that as an organization, we have been able to use the lockdown period to emerge as a stronger, wiser, and united entity to face the future. Before I talk about our specific quarterly and annual performance, let me first briefly update you on our business operations. During the COVID-19 pandemic, supply chain was disrupted from third week of March due to restrictions on movement by various states, which came to a complete halt when the nationwide lockdown was announced by the Government of India during the last week of March. To ensure safety of our employees, which was of paramount importance to us, we implemented work from home policy and armed our employees with all necessary IT infrastructures even before the national lockdown was announced. We ensured strict adherence to the government directives during the lockdown and commenced our production only from 10th of April in a phased manner. As we stand today, we have ramped up production across all our units and the capacity utilization is now back to the pre-lockdown levels. The trade and supply chain is also almost back to normal in most of the regions. Keeping in mind the safety and precautionary measures for all, we have resumed office with very limited attendance effective from 3rd of June. During this pandemic, our study of emerging consumer behavior trends revealed increased consumer consciousness towards health, hygiene, and immunity. As we learn to live with the coronavirus, that is not going to go away very soon, we also realize that this new consumer trend is here to stay. Accordingly, we went to our drawing boards to draw up a robust business strategy in sync with the changed environment and decided to expand our personal care and healthcare business in newer areas. As a first step, we launched a hand sanitizer in April under the BoroPlus brand, which is very well known for its strong antiseptic equity. Subsequently, we have recently introduced a personal hygiene range under BoroPlus to include an antiseptic soap and hand wash. We also launched BoroPlus Aloe Vera Gel during this period. We ramped up our healthcare portfolio under Jhandu brand and launched Jhandu Ayush Quath Powder and Ayurvedic Immunity Boosting Kadha and Jhandu Ayurvedic Hand Sanitizers. Few more immunity boosting and healthcare products are lined up under the Jhandu portfolio in Q4FY20. I am also pleased to share that we are also coming up with a range of home hygiene products shortly to tap this growing opportunity. Coming to our results, the summer portfolio got severely affected due to the operations being completely disrupted from the last fortnight of March until the end of April. This pandemic, followed by the lockdown, as we all know, has led to a decline in consumption due to rising unemployment and a significant drop in demand. This also led to a consumer shift towards more essential products like food and groceries affecting the sale of our niche and discretionary products. All these external factors, including the impact of COVID-led lockdown, led to a revenue decline of 17% in Q4, with consolidated revenues of 533 crores. While the domestic business, including CSD, declined by 19%, international business declined by 4% during the quarter. During the quarter, we roped in Bollywood superstar Salman Khan to endorse Navratna range, which will help in extending the product messaging to the masses. As we all know, there has been a major announcement last week by few MNCs in terms of fairness creams. Here I would like to say that we as responsible corporate citizens value consumer sentiments and the environment that we live in and take cognizance of the holistic approach that is required to be taken to address these needs. We are in the process of studying all implications currently and would evaluate to take a conscious and very informed decision. In FY20, we have posted a marginal decline of 1% with revenue at 2,655 crores due to our unprecedented Q4 situation. Although domestic business, including CSD sales, declined by 4%, international business grew by 16% during the year. I am not going into the individual brand-wise performance as those details have been shared in our presentation. But I wish to add that we draw strength from the fact that most of our brands increased market shares. While the traditional channels continue to be impacted in the domestic business, we increased our presence in modern trade channel, which grew by 26% in Q4 and by 16% in FY20. Contributions from modern trade in Q4 and FY20 also improved significantly to 12% and 9% respectively. Our e-commerce business also grew strongly by 167% in Q4 FY20 and by 128% in FY20. The channel has increased its contribution to more than 1% in FY20 from 0.5% in previous year. And we plan to double it in the current financial year. During the quarter, gross margins at 65.2% grew by 440 basis points. However, advertisement spends at 18.6% of sales increased by 310 basis points. Staff cost at 13.5% of sales increased by 290 basis points. And other expenses at 14.6% of sales increased by 410 basis points due to lower sales. EBITDA at 99 crores declined by 37%, whereas adjusted PAT after exceptional items at 94 crores declined by 22%. In FY20, gross margins at 67% increased by 130 basis points. EBITDA at 690 crores declined by 5%. However, adjusted PAT after exceptional items at 573 crores grew by 2%. I would briefly like to update on the cement deal. As you might be aware that Competition Commission of India has approved the acquisition of Emami Cement by Novoco, part of Nirma Group, and the deal with Brookfield Asset Management of Canada for sale of our solar power business has been concluded as a part of our disinvestment plan of non-core business assets. The finalization of the sale of group cement business is at a final stage and is expected to be completed in the next fortnight. Accordingly, we estimate that these disinvestments would lead to a significant reduction in promoter pledge. We believe that despite these disruptions, market conditions will stabilize slowly, and we expect demand and consumption to bounce back from Q2 FY20. Rural income are expected to rise due to central government packages from Manrega as well as due to good harvest. As we have a higher rural exposure, we expect to be benefited from it. Our innovation pipeline is also future ready, and we will undertake a slew of new launches to funnel growth as soon as the market condition improves. With this brief, I now open Q&A. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, hi sir. My first question is on the e-commerce. Historically, your percentage of sales has been much lower than the larger companies in terms of e-commerce. But in Q4 and the entire year, you have seen very good growth. And obviously, this is pre-corona. So what has worked here? Any particular player? Which segments are doing well? What really led to this change? Because in terms of portfolio, there is not any significant change versus last year.
Right. So Abneesh, and now we have touched 1% as far as e-commerce is concerned. And I told in my opening remark that we are wanting to double it. What we have done in the last few months that we have focused very extensively on this e-com by offering good prices, launching a lot of different SKUs, for especially e-commerce. And we have set up a separate team entirely for e-com. So whatever small challenges we faced in the past, we have overcome all those challenges. And now anyways, we all know that e-com has a very bright future. So we think that, we would be able to grow significantly going forward. With a lot of
across segments?
Sorry?
Is it across segments?
Yeah, so this is across segments and particularly on big sizes because we have launched very different SKUs for e-com.
My second question is what you alluded just now that Q2 should be better, and I understand Q1 also will be very tough. So you have higher indexation to rural, which you said. And second, of course, is we are seeing the migrant labor also come back now to the big cities again, which was a problem for you in Q1. So do you see in Q2 good growth coming back for Emami?
Yes, Avnish, the trend is very visible. If we see the numbers of April and May and June, so it is by and large, I would say June we have come to the last year numbers. Okay, if I compare it to the last 2 months, we have grown significantly. Okay, so I don't see any reason why we should not grow going forward. Anyway, we have a very rural base, whether it is in urban or rural. So, and our most of our brands, they are almost like necessity in some form or the other. So I don't see a challenge going forward from the month of June onwards, I would say.
The last question, you said cement money will now come soon in the next fortnight possibly. So my question is more structural on the promoter focus for FMCG part of the business. So one is where do you see the promoter stake longer term and if possible any time frame, and same thing on the pledging medium term, where do you see that number? And because most other parts of your business are anyway sold, does it mean on FMCG now there will be much higher focus, and that's why the execution will also be much better than the last 2 years?
Yes, I would say, Avnish, that the cement duel is now almost done. We are expecting money anytime in the next 10 to 15 days. And it would reduce our promoter pledge currently from 90% to, I think, about 45%. And with the further one or two disinvestments, we will bring it down to zero. So we are absolutely on the right track. And I have always maintained that not that our focus was not on FMCG, but yes, once these pledge issues will come down, we would be able to focus a lot more.
And promoter stake?
Sorry, what about promoter stake?
It has gone down by 20% in the last 1.5 years. So where do you see this longer term?
No, we haven't taken any decision on the promoter stake. The present state is we want to bring our pledge down to zero. Okay. So promoter stake is anyway 53%. That would always stay.
Okay. Okay, that's all from me. Thank you.
Thank you. The next question is from the line of Shirish Pardesi from Centrum Broking. Please go ahead.
Yeah, hi Mohanji and Rajeshji, good afternoon. I hope everyone at Emami is safe. I have 3 questions. The first question is on the Q4 performance. We have seen a largest decline in BoroPlus and Fair and Handsome. And if I go back Q3 commentary, we have hired BCG to have a revival in Fair and Handsome, but that is not reflected. So could you please highlight what are the reasons these 2 products have seen highest decline?
See, BoroPlus, Shirish, it's the season is not there for Q4, so it doesn't matter much. As far as Fair and Handsome is concerned, we are ready with our strategy recommended by them. We are yet to launch the new strategy. Suddenly, this pandemic came, and we have further postponed. Now this name change has come, so it is further delaying the strategy. But I think we are ready with what exactly we want to do with the Fair and Handsome brand. For BoroPlus, I'm not worried because as the season, we are approaching the season now, we would come back to our growth.
But is it something to do with the international business which has declined because BoroPlus is also sold in a large quantity in Russia and other part of European countries?
No, these we are talking of the India number, and international. If you will see, we have actually grown healthy in the Q4. Our growth has been almost 16%.
Okay. My related question on Fair and Handsome, we have seen that competition is going away with fair word, fairness, and these all things. Is there any compulsion or regulation which is passed by Indian laws that you need to take out this fair word from your Fair and Handsome?
No, there is no regulatory requirement that we have to get away with the word fair.
Because what I'm seeing that till the time if there is no law, you will always get benefited from the competition because Fair and Handsome or even BoroPlus is a very strong brand into the trade.
Right. So I have told in my remarks that we are evaluating the pros and cons. What needs to be done, we will take a call in 2 days.
Okay. My second question is on 80 Kearney we have hired for cost improvement and optimization in the supply chain. Would you have any, or would you be able to quantify what kind of benefits we will draw in FY21?
So we have quantified that series. Hopefully we will get in FY21, we will get a benefit of roughly about 50 to 60 crores in this year.
Okay. Any thoughts on international business, how we can see this? Because obviously even internationally will have a similar COVID challenges in terms of lockdown. But how do you estimate the next 3 quarters? And if you can give some color on international.
So international in this quarter, I think is at least in Q1, what I see is that it is slightly more hit than the domestic. Though in the June month we have got good amount of orders for the international business also. So things are picking up very, very fast. Hopefully, I think by the year end, because we are also launching a lot of new products under the brand Cream 21 in a lot of geographies. So keeping everything in the mind, I think we would be able to sustain last year numbers for international business.
You mean to say FY20?
Yeah, FY20, yeah, FY21, whatever numbers we have done this year, for FY20, we will be able to do next year. Yeah, because first quarter would be a decline.
Okay.
So we will be able to make up in the last 3 quarters.
Okay. So you're saying that the business will come back to FY20 level?
Yeah, because June we are seeing a significant jump.
Okay. My last question is on raw material prices. I think I see that directionally we have got benefit in Q4. So would you have some guidance on FY21? What kind of inflation you are seeing in menthol and other packaging material?
So, see, all the packaging material and menthol is favorable, and we are further seeing expansion in gross margin by at least 100 basis points.
Okay, that's it. So thank you for that, and all the best. If I have more questions, I'll come back in the queue. Thank you.
Thank you, Suresh. Phone number.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. So just a few questions from my end. Firstly, your thoughts on innovation. You spoke in your opening remarks about a slew of things that you're planning to do going forward, as well as home hygiene that you're looking to launch. So on that, I just wanted to get a sense of what do we expect going forward in terms of new products, as well as in home hygiene. Do we look to do it under in a current brand umbrella or a separate brand?
So we will come out with that, Harit, very soon, because we are working on finalizing the strategy now, and we have already finalized it. But once we come nearer to the launch, we will come out with a presentation. Okay. But it would be a new brand. It is not under any existing brand.
Got it. So got it. Second question was on the hair oil, kind of category, and the overall oil category, specifically for Navratna as well as Kesh King. So if you look at, there is a thesis that high price point products in the current environment, especially in the value-added hair oil space, could see some stress going forward. So how do you kind of read into that? Do you think that the same applies for 7-in-1 and Kesh King as well, or in the market, are you seeing a different trend?
Harit, as I said that, till from almost 15th of May, we are seeing a very normal sales as far as Navratna is concerned, or even 7 Oil is concerned. Okay. Anyway, you know that our small packs sales are very high contribution to Navratna. So we are not seeing any pressure or a huge consumer shift or trends going, against any of these brands. So there is no need for us to change anything. It is a seasonal brand. Unfortunately, we lost out on season. The peak season got impacted for Navratna. Okay. So that we can't get back. But honestly, going forward, I don't see it would have any impact.
And last question was on rural versus urban trends. Given that you have a strong salience in rural, are you already seeing this divergence in growth between tier 1 metro towns and smaller towns? Is that something you're already picking up from on the ground?
Yeah, absolutely. There are trends where we see that the sub-stockists in small towns, the growth is slightly higher than the urban towns. Because in a lot of big towns, anyway, there are sporadic cases of lockdowns and, wholesale markets still not functioning in some markets. So because we have a very strong rural coverage, we could manage our numbers from May 15th onwards. And as I said, June is almost like we are crossing our last year numbers. So if the trend continues like this, I don't see a cause of worry going forward. Because our consumer base is very, very widespread.
Yeah, fair point. So last one, if I may, was from a distribution, touch point perspective, number of outlets that you service. What percentage of that are back on track? I mean, is it 90%, 95%? Are we close to erstwhile levels in terms of GT servicing outlets? And MT and e-com I can understand, but from a GT perspective, are we almost there in terms of pre-COVID levels, or just wanted to get a sense on that?
Yeah. No, we haven't reached those levels because just to bring things to perspective, like we have almost 2,300 salespeople on the field. Presently, we are working with about 1,900 or so. Okay. So some areas where still people are unable to visit the markets. So we are touching almost 75 to 77% of our outlet base. But the major outlets, which gives almost 90% contribution, there we are servicing.
Got it, sir.
Yeah.
That's it for me. Thank you.
Because you also know that suddenly we see a lockdown in Chennai or a lockdown in Assam or a lockdown in some place or the other. So those are the places where we lose some bit of business.
Understood, sir. That's it.
But we are trying to make up that business through some wholesale markets also.
Okay. But wholesale would be affected, right? In the current context, the wholesale space would.
Wholesale is impacted, but because we are unable to reach out to every outlet, ultimately we have to reach to the wholesale only. So we have seen some demand. See, like in the month of May, we didn't had a single person visiting the markets, but we could do significant business.
Right.
So it was primarily through the wholesale channels, right? Same is also for June. As I said, we haven't reached to every outlet. So we still have to depend significantly on the wholesale channel.
Got it, sir. That's it for me. Thank you.
Thank you. The next question is from the line of Prakash Kapadia from Anivet PMS. Please go ahead.
Sir, on Zandu, which are, the geographies where we've test marketed? I guess these would be more urban audience targeted. And when do, some of these newer products be available pan-India? What's the timeline for FY21? Because, Zandu is one of the very strong brands. And, in your opening remarks, you did mention about the entire immunity building portfolio. So what's the plan for FY21?
So plan is very clear. We are coming with a lot of new offerings under Zandu because I strongly believe that post this pandemic, Zandu has a significant role to play. And we have identified a slew of products under Zandu. We would be launching all these products pan-India because we have a very strong distribution across India. So there is no question of test marketing any of these products. The products are very well tested in our R&D. A lot of products we had been working for many quarters. So I think this is the best time to launch every product and not delay it any further. So every month or every fortnight, we would be launching a lot of products. These would always be niche products. So, but very, very relevant post-COVID times.
And these would be available and the positioning would be urban, right?
I'm sorry, the positioning would be?
More towards the urban consumer rather than rural.
Yeah, prices are slightly higher. I see if the need is in rural, people will always buy. It is not like people don't buy Chyawanprash in rural areas or they don't buy Sancharis in rural areas. There's nothing like urban or rural portfolio. Wherever the need would be, people will buy these products. And Zandu is a very, very well-entrenched brand in urban and rural both.
Right. So over the next 2-3 years, we could see far more increased contribution to overall top line from this Zandu portfolio, right?
It looks like because we are launching a lot of products in the Zandu.
Yeah. And secondly, sir, amongst other power brands, which do you think could, end up in positive growth territory for FY21? I'm not talking of, next quarter or Q2. So based on our internal assessment, which other power brand do you think will, at least end up being positive for the year?
See, I think pain category is doing very well in this period. The best performing brand from our side has been the pain categories. And now every brand has started performing to the pre-COVID levels. So whatever business is lost, I think is lost. Other than if any brand which has slight challenge, I think it is still Fair and Handsome, where we need to completely relaunch. Other than that, I don't see any challenge in any of the brands. The only challenge is the first quarter. That's it.
Right. And lastly, one question for Rajesh. Out of the 192 crore amount on buyback, how much is already spent, or the average cost per share, whatever, if it is available or you could share?
So we have already spent roughly 150 crores.
Okay. Yeah. This would be a day or 2 days ago.
Yeah.
Okay. Fine. Thanks. I'll come back if I have more questions. Thank you.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, Mohanji. Thanks for the opportunity. Sir, many companies are using this crisis to reboot the whole cost structure, relook the distribution layers, management layers. So are we doing any structural changes in how we do the business on any of these aspects or any other aspects that I have missed out any?
Tejas, as ATK is helping us in the cost reduction measures, I think we have been very, very aggressive, not just because of the pandemic, but even before that, because this project is going on for last 6-7 months now. And we have identified a lot of areas where we can save cost. I also said that at least I am very sure that 50 to 60 crores benefit would come in this year, only on the cost front. So I don't think we have left a single area, on the cost side. I can't really detail out the projects or in detail whether it is supply chain, IT, or operations or sales. So, it is every area we have covered.
Great, sir. Yeah. This is helpful. Sir, and similarly on top line side, so if we see the last decade for Emami, we had a fabulous first half of the decade. Then post demonetization, things went downhill for various macro and micro reasons. So now, obviously, you spoke about a lot of launches in Jandu and many of the launches of variants and in the existing portfolio. These are good initiatives, but beyond these interventions, are we working with any 3-year, 5-year plan to get back on track and cover up the lost ground that we would have lost in last 2-3 years in particular?
No, absolutely, Tejas. I think we have worked very hard during the last 2 quarters. One is on the cost side and on the new launches. Post-pandemic, you would realize that in the last 120 days, we have almost worked on at least 40 to 50 products, new lines. Our R&D has been working 24/7. Our marketing department, R&D, everyone has been working almost 24/7. And we are launching these products. Some of the products we had not even envisaged before the pre-COVID levels. And now we are launching these products, So, definitely there has been a lot of aggression from our side. And somebody asked also on the management, now we are putting all our efforts on ensuring that Emami gets back to the growth levels, at least a double-digit growth levels, With home and hygiene, with a lot of Jandu products, I think we would also, and with soap and hand washes and with a lot of those products, we would reduce some bit of our seasonality concerns also. This is also in our minds. So I think, we are on the right track. That's what I think. Let's see how the market accepts these products.
Great, sir. All the best from my side and thanks. Thanks for that.
Thank you.
Thank you. The next question is from the line of Sonia Varnikar from Equentis Wealth Advisory. Please go ahead.
Hello. So thank you for the opportunity. I have 2 questions.
One is on the pledging. You said that we are looking out for more disinvestments, and then the pledging will be zero. Do you have any timeline for this? That is the first question. And second is on the capacity utilization. You said that we have reached pre-lockdown levels. Can you share the number? It's at what percentage?
No, so when I say production, so we have almost reached what we were at pre-COVID levels. If it was 100, we have reached 100. Okay. And as far as because all our factories are running full capacities now, as per the demand.
Oh. Okay.
So, and as far as the pledge issue is concerned, I think you can see the intent. We have been maintaining this for the last 1.5 years, that we would bring down our pledge, and we would divest some of our non-core businesses, and we have done also. Cement, I'm being very vocal. In the next 2 weeks, you would see that. Some of our other businesses, I think, because this lockdown happened, otherwise we could have done some more. But max to max, I think by March, we should see our pledge levels to almost zero.
Okay. Thank you, sir.
Either it would be through land sale or some of our other businesses.
Okay.
But promoter is very, very clear that the pledge has to come down to zero.
Okay, sir. Okay, thank you.
Thank you.
Thank you. The next question is from the line of Shubham Agrawal from Centrum Broking. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Just a continuation on the earlier question which was asked. I just want to understand, your capacity utilization is about 100% right now, and we are also talking about significant number of new launches coming through. So do we have a robust CapEx plan in the current year? What will be your CapEx guidance? 2-3 years?
No, most of it is third-party manufacturing, because these products were not planned. We are outsourcing them. And when I say capacity utilization is 100%, in the sense, of course, we have much more capacity. But if our demand was, we were producing 100 before, we are now also producing 100. But the capacity is far more to produce. We always have a 30-40% buffer everywhere.
Okay.
Yeah, but for new products, it's mostly outsourced.
Okay. And you also mentioned that we touched last year's sales. Is my understanding correct that we've touched last year's sales in spite of touching just 75% of the POS? Products are placed at 75% of the POS because we are working with less capacity. 1,900 sales people against 2,100 that we generally work with.
Right. So when I say that, I mean that in the month of June, we have reached our last year numbers. Okay. Because April and May April was very low, May we picked up, then June we are almost at last year numbers. And still our entire frontline people are not in the streets. But 90% of our outlet coverage we have almost reached, which gives 90% of our business.
Okay. 90% coverage, still 100%, almost there at COVID level of last year comparison, year on year, right? Okay. So then just on continuation to this only, actually Navratna declined 12% in Q4FY20 as a result of the lockdown, I'd say. And has there been inventory filling in Q1 which would have helped us reach the, has there been inventory filling in Q1?
No, there is no question of inventory. There is no question of inventory filling in any of the brands,
Because we won't have been able to place our products in Q4. That's what I'm saying. It would have been compensated in Q1. Is my understanding correct?
No. See, demand only started coming in post the lockdown was lifted. So, yeah. We are being very cautious because we are not wanting to, increase our number of days of inventory at the distributors level.
Okay.
So inventories have not gone up, to be very precise.
Okay. And so just the last one, our short-term loans and advances has increased by about 600 million. It is significantly above our previous levels of loans and advances from about 29 million last year, and it's been in the range of 40 million in the past 5-7 years. Anything you would like to follow? Why is there such a significant increase in loans and advances short term?
Hello. Yeah, Shubham.
So there's been an increase of 600 million in the short-term loans and advances. Just wanted to get a sense of what contributed to this, because it's significantly higher than what it has been in the past.
Yeah, right. So most of the loans and advances are business-related advances. So there is one loan which is outstanding in the month of March for roughly 60 odd crores. So which was short-term parking of funds, and post the balance sheet date, we have received the amount back from there.
Thank you. Shubham, we would request you to please come back in the queue, as we have several participants waiting for their turn. The next question is from the line of Amit Sinha from Macquarie. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Firstly, sir, on the cement business deal, last quarter in the earnings call, you had run us through, the details of the deal, and as in how much money you will be getting and how much will be the loan against the promoters after the deal. So just wanted some of those numbers, while you have obviously outlined that, the pledges will come down to 40 to 45 odd percent, but just wanted some absolute numbers if you can.
But Amit, numbers have not changed since last time. So the number stands the same, whatever I said in the last quarter. Because we have not renegotiated the deal, no?
Absolutely. So, but the loan against, but the overall loan against the shares, that has also remained the same. I just wanted to get that number.
It remains the same. It has not gone up, Amit.
Okay. Understand. Okay. Yeah. Secondly, sir, on the input cost scenario, how do you see the raw material prices as of now? And
I have already answered this, Amit. I think you missed it out. We are seeing an expansion of about 100 basis points next year. Costs are all well under control. Menthol prices have also come down, and also other raw material, packing material costs.
Sorry, I may have missed it because I joined in late. Last question from my side is, when you say this 50 to 60 crore savings, which you expect in FY21, does it also include savings on the A&P side? Is there any particular saving we are targeting on that side because of renegotiating of rates?
It is not on the reduction of advertising, because some brands we have reduced in the first quarter, but it is, yes, the rates for advertising has come down, which we have calculated.
Sure, sir. Just one last thing. Kesh King, I see there is a market share gain. Just wanted to understand, how is the competitive intensity there? Are you seeing prospects of further market share gains in that product?
The Kesh King is, it remains where it is. And this quarter also we are seeing, the brand has bounced back to the pre-lockdown levels in the month of June. Of course, I would not say that the growth has come back. So going forward, this is of course a very important brand for us. We are launching some of the small SKUs in Kesh King shampoo also in this quarter. So hopefully we would be able to achieve our last year numbers for 3 quarters. That's what it looks like.
Okay, sir. Thanks a lot. Thank you.
Thank you. The next question is from the line of Sirish Pardesi from Centrum Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have 2 questions. One is that, Mohan, just wanted to understand, you have launched Boro Plus hand sanitizer, and we also see that presentation says that you have Jandu Ayurvedic hand sanitizer. These 2 hand sanitizers are in what strategy? I mean, where do you think this is going to penetrate?
Shirish, firstly, I would say we don't need any strategy to launch sanitizers. Okay, so it is almost given. So, Zandu, because we strongly believe that Zandu has a far more stronger brand equity in South than compared to BoroPlus. So we have launched it particularly for the southern markets where Zandu enjoys a better reputation than BoroPlus. Okay. And sanitizers, as I said, is extended now to every brand has extended into sanitizers. Okay.
Yeah, I think what I was trying to say that Zandu has always a health flank, and this is very strong equity in rural. So from that sense, I was expecting. Would it dilute the equity? That's what my.
No, I really don't feel it would dilute any equity.
Okay.
Jitna din, we are not sure how long, how many years it would last, but for short term, it is absolutely essential.
Okay. And can you give some thought that how big is now healthcare? And maybe what I'm trying to understand is that, yes, you have displayed and said a lot of new product launches. So what kind of number you have in mind, contribution from new products in FY21? Because you seems to be optimistic that the loss of sales which has happened in April, May, against 8 months operation, you are saying that you will cover for 12 months.
Yeah. No, so we are, if I see all the brands with the new offerings, we expect at least 3.5 to 4% contribution from new launches.
And does it mean that you will have to spend more on advertising and margin may not occur in FY21, but FY22 there will be some improvement in margin for new products?
Not really. It's basically the Zandu or whether it is sanitizers, we are not going to invest much money behind them. It would ride on the brand Zandu. Of course, on home care, we have to spend some amount of money. But we would be able to save a significant amount of money on our existing products. So I don't see any pressure on margin. Because we would lose on turnover in the first 2 quarters. And there are a lot of fixed costs attached, So we are trying to make up every cost by launching a lot of new products. And also I think the need of the consumers are changing, where Emami can play a significant role, So
okay.
Keeping everything into mind, I think we have identified some areas and opportunities. As I said, ultimately the consumer will respond to whatever we do. We have to just wait and watch. But yes, company is getting aggressive for sure. And I don't see any pressure on any margin and nothing at all because cost is well under control. We have taken a lot of cost measures. We will save a lot of money, everywhere and put some money behind advertising. Yeah.
Okay. So in the new product launches, are you going to introduce Creme 21 in India?
We haven't decided on bringing in Creme 21 in India. Creme 21 is doing exceptionally well in some global markets. We have also launched a lot of products under the brand Creme 21. But yes, as of now, we don't intend to bring it into India.
Okay. And are you planning to get into any new category? Because I see you have gone into soaps now.
So that is an extension of BoroPlus. I mentioned home and hygiene is a big range. Zandu, we are launching a lot of new products. For e-commerce, we have identified a lot of new areas. We would launch a good amount of products only for e-com.
Okay.
Yeah.
All right. Thank you.
Thank you.
As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, Percy. Thank you, IFL. And thank you all the participants for joining us today for our results con call. Thank you.
Thank you. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.